Okay, looking at Foot Locker's stock here, you can see yesterday it gapped pretty heavy based on earnings, and now it looks like it's found some support here and is going to head back up and fill this gap. So you got your $15 mark here, so we'll mark this here because this is significant. Price loves whole numbers, so it's good to mark them out. So 15 bucks is kind of our low as of right now. Today, yesterday closed bullish. Today has opened. There's still 5 hours left, but this candle so far is pretty bullish. And so, but overall price, I mean, it's way below this moving average, so it's definitely bearish. So I'd be looking for a short position. I would not buy this personally, even though I do think this is going to fill this gap. And so you could have like essentially a potential buy, but I would not take that. I'm not trading against this trend. I'd be looking to short this once price gets back up to this area. So you kind of want to find the most significant area that has a whole number. So just based on this is kind of your area. About $25 would be ideal. So I'll put that in here. Maybe 24, maybe 24.50, just because it's on the low end here, and I think it's pretty fair. And there is also a chance that I'll just put this in first. 24.50. There is a chance that price, what'll happen is, and it's very common, so price is going to try to fill this gap here, and this is your main liquidity area right at 24.50 in this this zone here, which is the bottoms of these wicks, and then the bottom of this big bearish candle here. So this is definitely your main area of liquidity as of right now, but what's most likely going to happen is price is going to create a new liquidity area right below it. So it might not actually make it up to $24.50. It might make it to only $24. So, or $23.50. So it might create its own new liquidity area right in here, right below this main one at $24.50. And so that's something you got to watch for. And then I could see this happening. What I would do is put this in here, and then my next, I would let price come all the way back up to between we'll say between $23.50 and $25 is probably where price is going to go. And then once it gets to this area, you just wait for structure to switch. So right now you actually have really good bullish structure, just based on when it hit $15 here, you can see super bullish, right? Just higher highs, higher lows. This looks really strong and steady. Looks like it wants to head to this area. So this is a 15-minute candle, 15-minute time frame. So let's just say this structure continues all the way straight up, follows this line here all the way to this area, this $24 area. Then you want to see price hit this area, pull back out of it, retest it with a higher high, or sorry, a lower high, and then boom, there's your entry back down, and you target your $15 mark. So you're gonna have to wait some time for this to play out. This might be a next month play, so I'll actually put a marker in here so we can see this is September here. So yeah, this might take the rest of the month just to even make it up here, and then we'd be looking for a short position possibly next month back down to $15, and probably get a pretty decent risk to reward, because as long as you let price hit this area and then start to make its lower lows, lower highs on the smaller time frames, what you can do is cinch up your stop so that it's like something like this. You basically let it make its new liquidity zone, which might be right here between like 23.78 and 24.50. If that's your liquidity zone, then you can actually put this stop to just above it, and you'll be pretty good to go, and you get a really nice risk to reward based on that position. So that's what I would wait for. Let price come back up to 24.50 and then look to short it. Do not buy it yet. It's not something I would personally risk. I do think it's bullish as of right now, and I do think it's going to head up. So if you bought it right now, I don't think it would be the worst position to take. I just think it's a bad habit to form. Counter trend trading. You see price is way below this moving average. It's super bearish. I mean, we all know Foot Locker stock. Foot Locker's in malls. Malls are not doing good. That means Foot Locker's not doing good. I mean, it's pretty simple economics. So based on that, I'd be not looking to buy the stock at any time, but I would be looking to sell it if it came back up to this area. So that's what I'm going to watch. and I'll keep you guys posted. Let me know in the comments if it's something you're interested in. Any feedback on this, love to hear your thoughts. So that is Foot Locker.